Good morning, dear students. Welcome to the home mentoring session of accountancy. Myself, C.S.K. Khanna from the SD Vidya School of Balakand. Dear students, today I will share with you how to record the opening entry and the other different type of the entries. As you all know that opening entry is very important entry and that is recorded for brought forward the closing balances of the last year. So it is the first entry, but how it will be recorded, let's understand. I also told you how to record this entry when we had the live class, but once again we will learn through this question that how the opening entry and the other entries to be recorded. First of all, we must know what the opening entry is there. Opening entry is that entry which is recorded in order to brought forward the previous year balances. As you know, at the end of the previous year, the personal and the real accounts, they may show some closing balances. Now at the beginning of the next year, those balances to be brought forward. Now when those balances to be brought forward, an entry is to be recorded which is called as the opening entry. Now for recording the opening entry, very simple rule is there that all the assets to be debited and liabilities and capital to be credited. Opening entry will be here, asset account debit to liabilities to capital. But please note that all the assets which are to be debited here, they should be debited one by the name of the concerned asset. For example, if cash is there, bank balance is there, plant and machinery is there, building is there, fixtures are there, investments are there, inventories are there, debtors are there. So one by one we will debit all those assets again with the amount they had. Credit to be given to the liabilities again in the same way, one by the name of the concerned liability. For example, there may be creditors by the name of the parties, there may be bank overdraft, there may be bills payable, there may be some other outstanding expenses like that. So credit to be given to the liabilities by the name of the concerned liability. Then the balance will be transferred to the capital account. Now here, balance here means the total of all the assets minus the total of all the liabilities. Whatever is left out, that is transferred to the capital account. Now, sometimes you have been given the amount of capital also. Then you have to see that the debit side must be equal to the credit side as the basic rule of journal entry based upon the dual aspect which we call it as the double entry system of accounting. So we have to see that all the assets must be equal to the liabilities and the capital. Now in some cases when the total does not agree, suppose the asset side total is less than the total of liabilities and capital, then the difference to be transferred in the debit side to a newly opened account known as the goodwill account. तो जो डिफरेंस है अगर एसेट साइड शॉर्ट है लाइबिलिटीज और कैपिटल के टोटल से, दैट डिफरेंस टू बी शोन इन द गुडविल अकाउंट एंड दैट डिफरेंस टू बी रिटन इन द डेबिट साइड. नाउ इन द अदर केस, सपोज द क्रेडिट साइड दैट इज द टोटल ऑफ liabilities and capital is short than the total of all the assets, then in the credit side we open a separate account that is known as the capital reserve account and that account to be credited there. So we have to see that in the opening entry or all other entries, debit must be equal to the credit. So this way, if the total of all the assets is equal to liabilities plus capital, there will not be any requirement of opening of any of the account to the either side. But suppose if there is difference, I told you that if the assets side is short, a separate account is to be opened known as the goodwill account, that to be debited there. In case the liability and the capital side is short, we open another separate account, capital reserve, and the difference is shown over there. So this way, we will record the opening entry for brought forward the previous year closing balances of personal and the real account. Now see, in this example, we will learn how to record this. It say, following was the position of recent company as on 1st April 2017. Cash in hand, cash at bank, furniture, stock, debtors. Now again the name of the debtors are given Ram and Sham. Now see, all these are the assets. Creditors are given Anil and the Sunil. So what we have to do? We have to record all the assets by their name, and then to the creditors by their name, and the difference is to be shown in the capital account as the amount of capital is not given. See how this entry will be recorded. Cash in hand account to be debited, cash at bank is to be debited, furniture is to be debited, stock is to be debited, Ram is to be debited, Sham is to be debited. These all are the assets. See here, we have not did anything special. Whatever the assets and liabilities are there, we had already recorded to them by their name, one by one. Again, in the credit side, there two creditors are there, Anil and Sunil, we had credited to them. And then whatever the total of asset side is, we had calculated. From this total, we had deducted the total of credit side. Here it is only 9,000 on account of creditors, and the difference is posted into a different account known as the capital account, 95,800. So this way we will record the opening entry. Here the total of debit and credit side is equal. There is no problem for opening of any account in the debit side or in the credit side. But if the capital balances are also given, then you have to see that the total of all the items of the assets must equal to the total of liabilities and the capital. If it is not there, if asset side is short, separate account here to be debited known as the goodwill account, and if the credit side is short, a separate account is to be opened known as the capital reserve account in the credit side. Idea is there that debit and credit must be equal to each other. Now let's understand other journal entries. Received a check from Ram in full settlement of his account after deducting 5% cash discount. Now from Ram, how much we have to receive? 8,000. So we had given him 5% discount, that amounts to 400. So what we had received from him? Rupees 7,600. And what we had received? We had received a check from Ram. So here we had received a check of 7,600. Discount allowed is our loss, as we had given the discount of 5% on rupees 8,000, it is rupees 400. And from Ram, the account has been settled of how much amount? That is of 8,000. So what the entry will be here? We had here received a check from Ram. So here, see the entry will be check in hand account debit 7,600. When a check has been received and not deposited into the bank on the same day, we will record it a separate account known as checks in hand account. So here the check has not been deposited into the bank on the same day. So entry will be here. Checks in hand account debit 7,600 as it is our asset and real account. Discount account is a nominal account as it is our loss. So 400 is to be debited. To Ram is a personal account, credit the giver, 8,000 being credited here in order to settle the account from Ram. So this way we had recorded this entry. Deposited the above check into bank. Now see here, when we deposit this check into the bank, our bank balance will increase and check in hand will credited because we had deposited those checks into the bank. So both are the real accounts, debit what comes in, credit what goes out. So the entry will be here, bank account debit to check in hand account. See here that check in hand is debited in the previous entry. In this entry it is credited. So both are nullified to each other. Here it is in debit side, here it is in credit side. So both will be nullified to each other. So net entry left out, bank account debit, discount allowed account debit to NAM account. But you are not allowed to do this because in order to show the complete information and transparency, we have to record this entry also. So entry for deposit the above check into bank will be bank account debit to check in hand. So this way we had recorded this entry for deposit into the bank. Next transaction is goods purchased for Rs 20,000 at 10% trade discount and 5% cash discount, payment made by check. See here, the total amount of purchase was 20,000. Again, 10% trade discount. We all know that trade discount will not be shown here. So 10% will come 2,000. So net purchases are of rupees 18,000, 20,000 less 10% trade discount and 5% cash discount, payment made by check. In order to avail the cash discount, we had made the payment by check. So 5% will also be calculated as a discount on 18,000 because net purchases are of 18,000. So we will calculate here 10% of 20,000, 2,000, net purchase is 18,000, 5% of that comes to 900, and automatically we had issued a check of rupees how much? That is 17,100. See here the entry will be purchases account debit to bank account to discount receipt. Purchases are of net of rupees 18,000 being debited to bank account the net amount of the check which we had been issued, because if we make the payment through cash, we will write here to cash account. But here the payment was made through check, so we had credited to the bank account with 17,100. Discount received is our income. It will be shown in the credit side with 5% 900. And narration may written here that being goods purchased for cash and discount received. So this way we had also recorded the other entry. I will continue in my next video about the remaining entries of this question.